Wall Street ends sharply lower after Fed Chair Jerome Powell warns that tariffs could pose a challenge between controlling inflation and boosting growth. The Nasdaq tumbles over 3%. The Dow drops nearly 700 points. The Treasury yields fall to a one-week low. Asian markets are trading mostly higher as investors assess quarterly earnings and tariff worries continue to weigh on sentiment. The GIFT Nifty is indicating a gap down start for our own markets as well. Oil prices extend gains on the prospects of tighter supply after U.S. imposes further sanctions to curb Iranian oil trade as some OPEC producers pledge further output cuts. Gold prices zoom past $3,300 a barrel an ounce. In fact, they are nearing $3,400 an ounce as investors take shelter from tariff war. Wipro misses estimates in the fourth quarter. Revenue declines nearly 1% on constant currency basis. Growth outlook remains weak as the company expects revenue to drop by as much as 3.5% in the first quarter of FY26 as well. In key earnings to track today, Infosys will be reporting numbers later today. A CNBC-TV18 poll suggests dollar revenue will decline 1.4% sequentially. Investors will be keeping an eye out on the guidance for the full year. Also watch out for numbers from HDFC AMC. Good morning. It's the final trading day of this truncated week. It's also the weekly options expiry as well. You're watching Power Breakfast on CNBC-TV18. And in the Mumbai News Center, I'm Hormas Fatakia. Let's first take a look at how the Asian markets are faring this morning. Well, they've defied the sell-off that we saw on Wall Street overnight. Most of the markets in Asia are trading higher, barring the Taiwanese index, which is down 1%. The Shanghai Composite also trading below the flat line. But most of the other indices are trading with healthy gains. The Hang Seng too trading with gains of around 0.7%. Gains also coming in from the Nikkei in Japan, which is also trading with gains of a similar quantum, 0.7% higher there as well. The Kospi in South Korea is up around 0.4%. So barring Taiwan and the Shanghai Composite, most of the Asian screen is currently presenting a picture in the green. And in fact, even the Dow futures are currently in the green after the sell-off seen on Wall Street overnight. The Dow futures currently up 150 points. But the regular session last night, where the indices ended sharply lower, and that is because Fed Chair Jerome Powell warned that tariffs could pose a challenge between controlling inflation and boosting growth. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were down sharply across the major indexes in Wednesday trading, sparked by a tech sell-off and concerns about the economic impact of President Trump's tariffs coming from the chairman of the Federal Reserve. The Dow dropping 700 points, the S&P 500 down 121 points, and the tech-heavy Nasdaq suffered a 516-point decline. With uncertainty growing over the impact of President Trump's tariffs, Fed Chair Jerome Powell expressed concern in an interview Wednesday that the central bank could soon find itself having to choose between its dual mandates of controlling inflation and maintaining maximum employment. Powell gave no indication of where he anticipates interest rates are headed. Said the Fed is well positioned to wait for greater clarity before considering any adjustments to the Fed's goal of 2% inflation. Meantime, prior to Powell's comments, Wednesday began with a big tech sell-up. It was sparked by NVIDIA, the chip maker revealing in a filing that it will take a $5.5 billion charge tied to exporting chips to China and other countries. The chip was originally designed to meet U.S. export restrictions specifically for China during the Biden administration. Rival AMD issued a similar warning about a potential $800 million hit to its bottom line. As the disclosures show, the trade battle with China could significantly affect chip growth. That's what's happening here in the U.S. Back over to you in Mumbai.
Now, a big reason for the fall on Wall Street yesterday were remarks from Federal Reserve Chair Jerome Powell, who expressed concerns that the central bank could find itself in a dilemma between controlling growth and controlling inflation and supporting economic growth. Now, speaking at the Economic Club of Chicago, Powell pointed to President Donald Trump's tariffs as both unprecedented and very likely to hurt economic growth and cause higher inflation. Listening to what he had to say.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, you know, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, you know, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
A very clear no from Jerome Powell, and reacting to what he said, Joyce Chang, the chair of global research at JP Morgan, said that the stagflation risks are real and that the tariff war doesn't end after 90 days, while Aditya Bhave of BofA Securities too believes that his comments were very, very hawkish. Listen in.
We still have the recession risk, even with this 90-day pause, at about 60%. I mean, we see PCE inflation coming towards 4% over the next year, growth flat at the end of the year. Now, it's not imminent. I mean, some of the hard data is still looking relatively healthy, but, you know, flat growth, you know, higher inflation, still very high fiscal deficits. One has to highlight that these stagflation risks are, you know, real risk, and that the uncertainty continues. And I don't think it's over after 90 days. I mean, U.S.-China is going to be an enduring issue, and that's where you have, you know, the tariffs really, you know, at levels where they're going to take a material hit, you know, on the global economy.
What we heard from Powell right now was hawkish. There's no doubt about that. Steve talked about the analogies to 2021, 22. Here's another one. Powell said, and this for me was the most important part of his prepared remarks, he said that you cannot have an extended period of full employment without price stability. If you're a Fed nerd like me, you remember that he was saying the same thing to justify the previous hiking cycle, right? Remember, they were hiking through what was in real time a technical recession. But the Fed stayed the course and focused on price stability, and we think they're stuck. We think they're going to do the same thing, at least in the near term, this time around.
And that's we have the global market action, but how will all of these overnight cues impact our own markets? Our research team joins in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. Firstly, Vinny joins in to get all the market cues we need to watch out for today. Vinny, good morning. Well, it was a good day for the bulls yesterday, another 100-point gain, but the GIFT Nifty suggests something otherwise today.
Absolutely. Good morning, Hormaz. But, you know, yesterday also we did see a bit of red coming in for the Nifty, and then we saw that recovery closing at the day's highest point was what Nifty, third straight day of gain, but hoping that that continues and maybe we see some bit of a recovery coming in. As of now, obviously, it's indicating a bit of a red start. Now, just looking at yesterday's trading session also, Nifty closed at a 2-week high. Top contributors came in from the private bank side for the Nifty 50, whether you look at an Axis Bank, IndusInd Bank, HDFC Bank, among the top contributors for the Nifty 50. Interestingly, yesterday also we saw that FIIs were seeing and the continued buy came in for FIIs. So that is why I'm a bit hopeful that maybe if that is something that is sustaining, we could see that recovery coming in back for the markets. FIIs bought around 3,936 crores. DIIs are sold around 2,513 crores in yesterday's trading session. Now, what will the markets be reacting to? Some of them, you just highlighted before this as well. The comments that came in from Fed Chair Jerome Powell in terms of tariffs, inflation, interest rates, where that is all headed as well. So that's important commentary there. The WTO, that's also slashed the 2025 trade growth forecast. So that's going to be a key to watch out for. And Trump tariff updates on that front, bilateral trade talks, how are they going with other countries as well? That update is something that, markets across the globe and India is keenly watching out for as well. IT sector today will be in focus. We had Wipro's numbers yesterday, and then obviously Infosys is reporting numbers today. And lastly, weekly expiry is important to watch out for. Maybe some bit of volatility on that front is what we could keep an eye out on. Nifty implied open, like you mentioned, is indicating a red start for the Indian markets as of now.
A red start indeed, but the implied open has improved quite a bit over the last few minutes. Earlier in the day, it was pointing to a 100 points gap down. Now that has come down to around 65 points, but still it's a start in the red nonetheless for our own markets. Vinny, thanks a lot for that. And now to some stocks that you need to keep an eye out for today. Of course, earnings reactions. The big number that came in yesterday was from Wipro, and the constant currency revenue that the company reported, of course, below expectations, at a decline of 0.8%. The poll was projecting a 0.2% decline, but the guidance was the bigger disappointment. They're expecting a guidance to be a revenue drop of 1.5% to 3.5% in the first quarter of FY26 in constant currency terms, and as a result of which the US listed shares, the ADR, was down 3% last night. So keep an eye out on Wipro. Angel One's results also were on the disappointing side. Revenue was down 16%, and that is because the net broking income fell 21% from last year. Client acquisitions were down, margins were lower, profit also fell almost 40% from last year. Now, Sonata Software has come out with a warning saying that the revenue estimates from its largest client will be lower than what was envisaged earlier in the fourth quarter, and as a result of which the international business that will be impacted in this quarter. Now, the international business is around 25% of the overall revenue. BHEL, well, they have signed a technology transfer agreement with BARC for electrolyzer systems for hydrogen production. So keep the PSU on your radar as well. Now, Lupin and Zydus were the two big losers yesterday on the Nifty 500. Both of them have come out with a clarification on this Mymetric patent case, where they're saying that they're assessing the further impact, they're mulling legal action as well, but there is no material financial impact as of now. Well, IRFC has set aside the GST demand order of 230 crores, but Dalmia Bharat 2 has received a provisional attachment order worth around 793 crores for as well. That keep an eye out on Glenmark, where they are supposed to launch a product in the US markets in the month of May, and that is for the mixed salts of a single entity of an amphetamine product. The market size is around 422 million. And Paytm, Tata Steel will be also be in focus, and of course, as Vinny highlighted, the stocks that you need to keep an eye out for on the earnings front today, be it Infosys, HDFC, AMC, and Geo Financial Services. Over to Sudarshan now, who would list out cues from the F&O space today. Sudarshan, good morning. We are still near that 23,500 mark, but what's the F&O data indicating to you?
Good morning, Harma. So the cues for the weekly expiry day are largely looking positive. It's not that bad, while GIFT Nifty is indicating a start with minor cuts. But overall, if you talk about the cues, that are looking positive, and that's mainly because of one sector, that is banking, which is keeping market higher for the last three sessions. Yesterday also, because of big gains coming in IndusInd Bank, HDFC Bank and Axis Bank, we have seen big gains for both Nifty and Nifty Bank. Even mid-cap index closed with healthy gains. For today, GIFT Nifty is indicating a start with a cut of around 60 to 60 points. But talking about the flows, again, because of big gains in banking space, we have seen big buying because of big delivery that we have seen for stocks like IndusInd Bank, IndusInd, and even for HDFC Bank continued for like second straight day. FIs continue to be on the buy side. Yesterday also they have bought nearly 4,000 crore, but for DIs we saw sell figure of around rupees 2,513 crore. As far as the futures data are concerned, in the index futures, we have some minor buying by FIs of around rupees 172 crore. Even for the longs and shorts, there were minor changes for the longs. They have reduced positions by 100, and for the shorts, they have reduced They have reduced positions by around 1,400 contracts, and long exposure remains healthy around 28%. Talking about the option writers, now the zone on the upside has moved higher around 23,600 to 23,700. On the downside, it's around 23,100 to 23,200. And that's the reason support for Nifty is now around 23,100. That is also 20 DMA. And on the upside, resistance is now around 23,650. Now, one stock that has entered the band is IREDA, apart from already 4 stocks that we have in the band.
IREDA, one of the outperformers yesterday, now in the F&O band. Darshan, thanks a lot for that. Take a short break. Up next, we get to the key highlights from the big number that came in yesterday. That was Wipro. Stay tuned. We'll be right back. Welcome back. On to earnings corner then. Wipro's results were a miss on expectations. They were reported after market hours yesterday. Revenue declined nearly 1% on a constant currency basis. Rima is joining in with more highlights on that. Rima.
Thanks so much for that. So I think the biggest disappointment when it comes to Wipro is their Q1 guidance. Because March is done, the March quarter, right? So even if there is a revenue miss in Q4, it's in the past. Given the current macro uncertainty, what Wipro had to say about the June quarter was paramount, and the numbers are telling you that things are going to be painful. The company is guiding for minus 3.5% to minus 1.5% in Q1 in the June quarter. In fact, the company commentary also says clients remain cautious in the face of macro uncertainty. So the Q1 guidance is a miss. Also, the Q4 revenues has come in at the lower end of the company's guidance. So in Q4, revenues have fallen sequentially to minus 0.8%, closer to the lower end of the company's guidance. Where the company's done well is on 2 accounts. One is their margin defense. So despite revenues falling in the March quarter, they've held on to margins at 17.5%. So unchanged sequentially. And even for the full year, FY25, they've managed to expand their margins by 100 basis points. And secondly, the deal wins. The company's total deal wins are up 13.4% quarter on quarter, nearly approaching $4 billion. And even their large deal bookings at $1.7 billion shows an improvement of 48% on a year-on-year basis. So in those 2 counts, the company's done well on margins and on deal wins. But looking ahead, just purely in terms of a June quarter and the Q1 guidance, it is a bit disappointing.
Indeed, and the disappointment showed in the ADR as well, was down 3% overnight. But Rima, stay on, because Infosys is also going to report results today. What are the expectations from there?
So, after TCS and Wipro both disappointed the street, Wipro particularly with its Q1 guidance, all eyes, as you said, will be on Infosys. Now, again, we're expecting revenues to decline in terms of the top line on a quarter-on-quarter basis. Dollar revenue seen down 1.4%. Constant currency revenue growth is seen down a little more than 1%, which will be worse than what TCS and Wipro reported in the current quarter. EBIT margins for the company are also likely to decline to 20.7%, a fall of 60 basis points quarter on quarter, because part of the wage hike comes into effect in the March quarter. Profits, according to a poll, though, should be up. But again, the key is going to be on their FY26 guidance. We know Wipro missed the mark when it comes to the June quarter. Will Infosys guide? If they do guide, what will they guide for? Because there's so much uncertainty right now. Currently, street estimates appear to be that maybe it'll be 2 to 4% in terms of a top-line growth, or maybe 1 to 4% if they want to just throw in a wider band to account for the uncertainty. But, I think perhaps the management is likely to be fairly conservative when it comes to the guidance.
Rima, thanks a lot for that. All eyes on Infosys after the miss on earnings delivered by both TCS and Wipro. We take a short break. On the other side, we get your cues from the commodities market. Stay tuned. Welcome back. Now, a U.S. judge has ruled that he found probable cause to hold President Donald Trump's administration in contempt in a deportation case. The court's ruling has now increased the prospects of officials being held in criminal contempt of court and potentially facing possible prosecution. Sanjay Suri is joining in with all the details of that.
A U.S. district court has ruled that probable cause exists to hold Trump administration officials in criminal contempt for ignoring a court order against deportations. Probable at this stage because Judge James Boasberg has ruled in Washington that he's giving the Department of Justice further opportunity to respond to his order. Meanwhile, the judge said he's considering his next steps that he may take and the punishment he may decide upon. He's asked the Trump administration to respond by next week. The deportations have been heavily controversial. The U.S. government sent 3 plane loads of migrants to a prison in El Salvador in mid-March, and this was despite Judge Boasberg's order against use of the Alien Enemies Act to deport these migrants. And these were said to have been Venezuelan gang members by the government. The judge in any case ordered 2 flights to return, but they carried on. The Supreme Court later ruled that the district judge lacked the jurisdiction to have ordered the deportations, and it said the deportations could continue. But Boasberg is proceeding over the contempt issue in any case. He added that he has given defendants ample opportunity to rectify or to explain their actions, but that none of the responses so far has been satisfactory. Following the Trump administration's confrontation with the whole world over tariffs, the row with Harvard University, this now marks a new battlefront opening up between the Trump administration and the courts, and also between the courts. White House spokesperson Caroline Leavitt had dismissed Boasberg as a rogue judge. Secretary of State Marco Rubio spelled out in the White House that these are decisions for the administration to take, not for the courts. So this new order coming on Wednesday places the administration and the court itself in uncertain territory.
Sanjay, thanks a lot for that update. Now, Manisha Gupta joins in with all the updates from the commodity space. Manisha, good morning. The rebound in crude oil prices continue, but there is no stopping gold.
Oh, yes. I'll start with the crude oil prices right now because we're trading at a 2-week highs onto this one. Overnight has been 2% of gains, and with this, we are headed for a weekly gain of 4.5%. With U.S. tightening sanctions on Iran oil trade and OPEC producers pledging to cut outputs to be within the quota is something that really seems to be supporting the markets right now. Apart from that, we also have seen a drawdown in U.S. distillate inventory, suggesting that the demand in U.S. continues to be on the stronger side when it comes to gasoline distillate. That also seems to be keeping the prices higher. Oh, but well, absolutely. The headline continues to be from gold. All-time highs yet again. $33.50 an ounce has been taken up now. Gold is now one of the top performing assets. And while last year the gains was almost 28%, we're 27% up already right now, and we're not even done the first half of this year. Strong gains as escalating U.S. and China trade tensions lead to safe haven buying. And then the U.S. ordering probe into possible tariffs on critical mineral imports is what has led to gains. If you look at the month of March, the central bank buying has been strong. The ETF buying continues even stronger. And there's not so much profit taking or redemption at these levels as well is what is keeping the gold prices higher.
Wow, it's almost nearing 3,400 as 3,170 was the new high. Almost 3,371 is the new high that gold prices made today. Manisha, thanks a lot for that. But with that, we call time on this edition of Power Breakfast. Bazaar Morning Call sets you up for the day straight. From me and the team that put this show together, thank you so much for watching.